Good afternoon, folks. Just gone 5 on Monday afternoon. Just having a quick, just sort of recap of the markets into the close, European close. What am I looking at here? Euro, US dollar. So as you know, I've been looking for a bounce. I've been looking for strong support around the 115.90, 115.70 area. We've been down as low as 115.62. Seeing a nice bounce today, as hoped. Nothing dramatic. 116.20, but at least we are holding that support level. So we're oversold on the daily chart, as you've just seen. I could put some Fibonacci levels on the 4-hour chart just to give us an idea of where we could get to. There we go. I'm going to start from that point there, join it to the low down here. There we go. Okay, so that gives us a 23.6% fib up around 117.25. I could actually even argue, look, I could even argue that on the very short-term chart, let's go to an H1 chart, an hourly chart. I could, excuse me, even argue that we have a very minor inverse head and shoulders pattern. Where would I put that shoulder? I guess there. I could argue that that's the left shoulder, the head, the right shoulder. Anyway, one way or another, hopefully we are building a recovery in the euro, which is what I'd hoped for, especially after we spotted that the dollar index may have peaked last week. In fact, the dollar index peaked exactly at the level I notified you about. So kind of playing out the way I'd hoped. Looking for this euro now. Look how the euro's dipped back to that neckline of the head and shoulders pattern, the inverse head and shoulders pattern, and the 100-hour moving average starting to recover from there too. So these little indicators are telling me that we just could see a continuing euro recovery off my big buy level. Aussie US dollar has done a lot better. We've had a really nice recovery off there. We're now testing the 500-hour moving average, so we seem to have paused there. That comes in around the 50-day moving average. So I did have a big resistance up there around 73.00. Not really a surprise that we are holding there. Why don't I put some Fibonacci levels on my daily chart? There we go. Okay, whoops, yeah, that works. So 73.10, 73.20 is really 73.00, 73.20 is the resistance level. We have been up to 73.03. We've got the 50-day moving average there. As I said, we're just kissing that 500-hour moving average. So it's not surprising that we've stopped there. That was my ultimate target for the trade. Looking good. Probably will be looking to buy on a pullback, but right now I'm just going to let it settle, see what happens. Excuse me. Aussie yen. We had a sell opportunity at around 80, 90, 81.00. The high for that move today was 81.16.5. So that looks pretty good. We've come back quite significantly from that resistance level. So yeah, I'm happy with that. Short term, we're kind of flatlining, but we managed to have caught the peak for the day. Hopefully that will be the high of the day and we start moving back towards these lows. That would obviously be really nice. Where do I want to go now? I want to look at gold. Now, when gold opened on Sunday night, we tested the resistance at 70.62, 70.64. Where did we get to? 70.65. And then the market sold off really nicely. Sold off a good 15 points, if not more. So, nice trade there. Nice support level down there, actually, on the 23.6% fib. I didn't know for sure it was going to bounce off there, but certainly it hit the first target of 17.49. Now, looks like we're trying to break through that resistance. We've been up to 17.70. So, as long as we now hold above 1764, 1765, 1762, I'm going to call it, the outlook is more positive for gold. It looks like we have broken the resistance level and gold can continue higher. So I'm hoping that anyone who looked at that resistance in gold overnight made a nice turn on the short position, and maybe now we need to start thinking about a long position in gold. As long as we hold above 1760, a stop below 1760 seems to make sense to me. I'm going to look at the stock markets now. The Germany 30, the DAX, we have a very big support level, really, really, really very important support level. As you can see, now it's a little bit confusing, this is a lot of lines on here. This is what I believe is the neckline to a very important head and shoulders pattern. The first, it starts on the 19th of July, just after that bottom, where then we tried to crawl up, very slow, rounding top, and then we dipped again and a decent bounce off it. And I think that this is the right shoulder to a head and shoulders pattern. Now, we don't know it's a head and shoulders pattern until we get the break of the neckline. Now, on Friday, that support level worked beautifully. Long positions would have done really well off that. The 500-day moving average. sorry, the 200-day moving average, the neckline to the head and shoulders, and it's just above a fib support as well, which is around 15,900. So all looking good. There were some nice 200-point turns on that. And look at that candle, the long lower wick, a pin bar, the hammer, whatever you want to call it, gravestone doji even. So now we're retesting that. Will it hold this week? Well, we don't know for sure. We have to wait for price to tell us what will happen. But clearly there is a risk that we break below 15,000. Really, for me, a break below 14,900 would be very, very clear confirmation, because that would be the fib support level broken as well, that the DAX is going to fall significantly. That's what I think. So we really are at a crucial point. Good support around 15,000, 14,950, break below 14,900. I think we can kiss goodbye to the DAX for a little while. Slightly similar on the S&P. I'm wondering if this is another head and shoulders pattern with the neckline descending trend line for the neckline, but that doesn't matter. That's perfectly acceptable for a head and shoulders pattern. And in fact, if I zoom, I'll tell you what, let's zoom in on the 4-hour chart where we can have a look at what could be a developing bear trend. So what do I need to do here? I need to put a trend line from this peak up here down to this peak here. Okay, I think we can see that there's a downward sloping trend line which is holding all the bounces back. Right now we have the trend line running sort of parallel with the 100-hour moving average. We've dipped to, let's go back to the daily chart, what could be the neckline of the head and shoulders, and if it is and we break sort of below 40, well, I think last week's low, which was 42.69 on the cash index, break below there, and that could be the sell signal in the short term at least for the S&P, and we could see some further significant declines. Let's have a look at the US 30, the Dow Jones. Again, I could argue that this is a head and shoulders pattern, left shoulder, head, smaller right shoulder. That's fine. It doesn't need to be symmetrical. It just needs to indicate that we have a lower peak from the head to indicate that the trend is starting to turn down. We do already have a slightly lower low there, just past the neckline, or if it is a neckline to a head and shoulders pattern, hitting the 200-day moving average and bouncing off there. So break below the 200-day moving average. We're talking around the sort of 33,480 area on the cash index. Could well send the Dow Jones, the US 30, significantly lower as well. So basically, these stock markets are at crucial levels, really need to be watched carefully. Tipping point. Now, I could argue again that the Nasdaq has a head and shoulders pattern, and that's been hit harder. Now, look, I can certainly argue, let's put this on an hourly chart. That would be a lot clearer. There we go. If that is a head and shoulders pattern, left shoulder, nice head, right shoulder, break of the neckline, down, retest, and down we go. Moving averages are certainly indicating a negative trend at the moment on the 1-hour chart. Let's go to the 4-hour chart. If the moving averages are indicating a negative trend on the 4-hour chart, we've got more to be worried about, or the bulls certainly have. We've got some moving average crossovers there. We've got the 100 crossing below the 200. We've got the 50 crossing below the 100 and the 200, and now approaching the 500. Let's go back to those other stock markets actually on this shorter time frame on the 4-hour chart. Yep, again, some moving average crossovers there on the S&P 500. Price, not only have we got price now trading below all those 4 moving averages, but we have the moving averages crossing over each other as price starts to tumble. Nasdaq, I think I've already looked at. There we go. And US 30, the Dow Jones, similar situation. Moving averages crossing over to the downside. Price now holding below all the moving averages, and in fact, the moving averages acting as resistance on the 4-hour chart. So you see, there is an increasingly negative tone in these stock markets. And let's go to the Germany 30 on the 4-hour chart. I'm not sure if I looked at that or not. Again, so moving averages crossing over to the downside, price holding below those 4-hour moving averages. You get what I'm trying to say to you, don't you? There is an increasingly negative tone to these stock markets. And if they break last week's low, this could be a significant indication that stocks are going to fall a lot further. Okay, I think I've said enough. You get the picture. We'll have a look at that again tomorrow, and I'll be giving you updates if I need to on the text throughout the evening. We'll keep an eye on those levels and see if they break, see if we get a daily close below them. Okay, good luck. Talk to you tomorrow.